After the failure of finance during the great financial crisis and the lost decade that followed, the financial industry now has the opportunity to demonstrate that it can be a catalyst for positive change. It can play this role by helping to bridge the financing gap, supporting the reallocation of flows towards sustainable development and away from harmful economic activities. Through a fiduciary lens, it is wrong to think that there is some sort of trade-off between value and values that financial firms have to wrestle with. In reality, it is quite the opposite. Ignoring sustainability risks in a client portfolio will actually undermine the long-term value of that portfolio. But there's growing conviction that sustainable strategies represent a long-term opportunity for higher, more diversified, and therefore more robust returns. For us to travel on the path to a sustainable future, we will need strong political will and a robust regulatory framework to transform the Sustainable Development Goals into sustainable development actions. One of the most important questions we face is the scale and scope of government action on climate change, which will generally define the speed with which we move to a low-carbon economy. This challenge cannot be solved without a coordinated international response from governments aligned with the goals of the Paris Agreement. Governments and the private sector must work together to pursue a transition that is both fair and just. We cannot leave behind parts of society or entire countries in developing markets as we pursue the path to the economic recovery. Any attempt to rebuild the structure in its original form will inevitably recreate the same fragility. Reorienting public flows towards sustainable projects and companies will be an important signal effect for the rest of the market.